Welcome back to our recorded discussion. I am your discussant, Professor Rebecca McKilling. So our topic is a continuation of income taxation on individuals. So this is part 2. So your payable is 96,000. Okay. Next, 8% income tax rate. Under the new train law, there is an option for purely self-employed individuals. Okay. They can opt to 8% income tax rate, or they can choose the progressive tax rate. So the 8% income tax rate, this is only for purely self-employed individuals and or professional whose gross sales or gross receipts and other non-operating income does not exceed the value-added tax threshold, which is 3 million our VAT. Kung lumampas na ng 3 million yung gross sales and receipts, for the entire year, this is already subject for value-added tax. Okay? For self-employed individuals and or professionals shall have the option to avail the 8% tax on gross sales or gross receipts and other non-operating income in excess of 250,000 in lieu of the graduated income tax rate under subject of this section and the percentage tax under this section. Because if you are employed, individual, you have this percentage tax. You will pay the percentage tax as your business tax, and you will also pay your income tax. So under the new train law, i-combine na lang the percentage tax and the income tax into 8%. Usually, yung percentage tax natin is 3%. And then, progressive tax rate. Pero ngayon, kuan na, medyo simplified. You just choose. Either you will pay the percentage tax 3% plus the income tax, or you just choose plainly 8% income tax rate. No, hindi ka na magbayad ng percentage tax. Ito na lang yung babayaran mo. And then, wala ka ng progressive tax rate. Okay? So, yung iba, they need to consider the benefits of choosing between this, the 8% income tax rate, or choosing the normal method in computing the income tax. So, illustration. Miss ECQ operates a sari-sari store while she offers bookkeeping services to her client. 2018, her gross sales amounted to 900,000. So, meaning hindi lumampas ng 3 million, okay? So, in addition to her receipts from spa services, meron siyang 500,000, 900 plus 500, so hindi pa lumampas, She already signified her intention to be taxed at 8% income tax rate in her first quarter return. For 8% income tax rate, kailangan on the first quarter, you click, you have your intention to choose the 8%. Okay? But if you fail to click that your intention that you will opt for 8%, you are subject for progressive tax rate. So, solution, gross sales, sari-sari store for spa. So, total sales receipts is 1,400,000 less the allowable deduction, which is, walang business expenses ito, Wala. Okay, so all, kasi 8% man, so wala na. Less the allowable deduction, 250,000. So, your taxable income is 1,150,000. So, your tax due is 8% of it, so 92,000. So, if Miss ECQ failed to signify her intention to be taxed at 8%, so he cannot opt to apply the 8% rule. So, doon siya sa progressive tax rate. So, recall, 92,000 yung binayad niya, dati yung 8%. So, kung normal tax rule tayo, so you less the cost of sales, you less the expenses, and then taxable income na dayon yan, and then you compute for your tax due. But aside from the income tax, you will also pay your percentage tax, which is 3% of the gross sales. So here, enumerated ang kaniyang cost of sales and operating expenses, 700,000 ang cost of sales, and the expenses is 100,000. So if mapansin niyo, mas mababa ang kaniyang tax due 70,000 compared to the previous one, the 92,000 ba yun, okay? But meron pa siyang babayaran, aside from the income tax, meron pa siyang babayaran na this is subject for percentage tax, 3% of the gross sales, so 3% of 1 for the business tax. So, compute ninyo kung whichever is, sino, naka-benefit ba siya, using this one or the 8%. Pero hindi naman siya pwede maka-apply, kasi she failed to put his intention, the 8%. Okay. Mr. MCQ signified his intention to be taxed at 8% income tax rate on gross sale in his first quarter. He has no other source of income. His total sales for the first three quarters amounted to 3 million, but in the fourth quarter, lumampas, 3,500,000. Okay, so, di ba, yung pwede lang dito is yung hindi lumampas ng 3 million. So, let's look on the solution. So, we have the total sales. So, compute natin. 500 plus 900 plus 1,500,000 plus 3,500,000. That is 6,400,000. Less the cost of sales. So, itotal mo lahat. That's your gross income. Total din yung operating expenses lahat. First, second, third, fourth quarter. So, your taxable income is 2,080,000. So, income tax due. Tax due under graduated sales. That is 505,600. But, in your first, second, third, you apply for 8%. So, ililess mo yon. Your annual income tax payable is 303,000. So, taxpayer is liable for business tax in addition to income tax. For this purpose, the taxpayer is required to update his registration from non-VAT to VAT taxpayer. So, percentage tax shall be imposed from the beginning of the year until taxpayer is liable to VAT. So, VAT shall be imposed prospectively. So, hindi pwede retroactive. So, prospect. After na siya makaregister for VAT. Another illustration, Miss GCQ is a certified public accountant who offers an accounting and auditing services. Since her career flourished, her total gross receipts amounted to 5,550,000 for taxable year 2019. Her recorded cost of service and operating expenses were 3,400,000 and 1,050,000 respectively. So since lumampas sa threshold na 3 million, so we subject for value-added tax already. So, he cannot opt for 8%, no? Kasi lumampas siya. So, solution, gross receipts, 5,550,000 less cost of services. And then, your taxable income is 1,100,000. So, under the progressive tax rate, so his tax due, income tax due is 220,000. So, aside from this one, magbayad pa rin siya ng value-added tax, which is 12% of the gross receipts. 12% of 5,550,000. Monthly yan, monthly. Okay? Okay, so our illustration here, in 2019, Mr. CMG owns a nightclub and video bar with a gross sales receipts of 3,500,000. So, hindi siya pwede mag-value-added tax because this is subject to other percentage tax even nga nag 3,500,000 siya. So this is, ang kanyang business kasi nightclub and video bar. So subject siya for other percentage tax, the amusement tax, which is 18% of the gross sales. Okay? But he is subject also for income tax. Pero hindi siya maka-avail ng 8% income tax. Okay? So compute his business income tax, his total income tax. So, get first the taxable income. So, 1 million ito. So, yung tax due natin is 190,000. How about the rate of tax for mixed income earners? So, taxpayers earning both compensation income and income from business or practice of profession shall be subject to the following taxes. So, all income from compensation, the rates prescribed under subsection of this section, and all income from business or practice of profession. If the total gross and or gross receipts and other non-operating income do not exceed the VAT threshold 3 million, the rates prescribed under subsection, pwede siya mag 8%. Pero kung lumampas, hindi pwede. Okay? Combine yan for mixed income earners. Okay. So, illustration. Ms. GCC, a financial controller of GMC Company, earned annual compensation on 2019, 2,500,000 inclusive 13% month and other benefits in the amount of 120,000 but not of mandatory contributions to SSS and PhilHealth. Aside from employment income, he owns a convenience store with gross sales of 1,400,000. His cost of sales and operating expenses are 600,000 and 200,000 respectively, and with non-operating income of 100,000. So compute. Okay, next illustration, Ms. GCC, a financial controller of GMC Company, earned annual compensation in 2019 of 2,500,000. This is inclusive, meaning included yung 13-month and other benefits in the amount of 120,000. But the net of mandatory contribution to SSS and PhilHealth. So aside from employment income, he owns a convenience store with gross sales of 1,400,000. His cost of sales and operating expenses are 600,000 and 200,000 respectively, and with non-operating income of 100,000. So let's look if the gross receipts is more than 3 millions. Since if it is more than 3 million, so this is subject for VAT, and there are no choice to up for 8%, 8% of upted 8% na ano, no? So, tingnan natin. So, his gross sales is 1,400,000. Do not include the compensation income. So, meaning he have the choice to up to 8% or choose the graduated tax rate. So, let's compare. If GCC opted for 8%, so let's look on the total compensation income, 2,500,000 less the non-taxable 13-month, which is up to the maximum of 90,000. Okay, so the taxable compensation income is 2,410,000. If he is opted to 8%, so meaning the income from his business is subject for 8%. So only the compensation income would be subject for the progressive tax rate. So for tax due and compensation, so 2 million, constant is 490,000, excess of it times 32%. So our tax due and compensation is 621,200. And then for business income, gross sales, add non-operating income. So the taxable business income is 1,500,000. The tax rate is 8%. So tax due and business income is 120,000. So add the two. So the total income tax due, compensation and business mixed income is 741,200. Now let's look on the graduated tax rate. If he is not opting to 8%, okay? So total compensation income 2,500,000 less the maximum deduction for the 13-month and other benefits is 90,000. So the taxable compensation income is 2,410,000. Add the taxable income from business. Okay, let's look over. So gross sales 1,400,000 less cost of sales, gross income less operating expenses 200,000. So net income from operation is 600,000. Add non-operating income 100,000, and then deduct it from so adding all the compensation income and the business income. So the total taxable income is 3,110,000. So using progressive tax rate, our total income tax due is 845,200. So compare it if Miss GCC opted for 8% and then the graduated tax rate. So much mas favorable yung if he opted to 8%. Okay? There is a difference, no? So you compute how much is the difference. So uh, meron siyang ma-save, no, na tax. So 845,200 less 741,200. So the result of it is the savings, no, for on the part of GCC if she opted for 8%. And take note, aside from this total income tax due, which is 845,200, if Miss GCC, no, use the graduated tax rate, meaning hindi siya nag kumuha sa 8% nga opted rate. So aside from this, magbabayad siya ng percentage tax based on his gross receipts of his store or gross sales of his store. So 1,400,000 times 3%, so 42,000. So 42,000 plus the total income tax, which is 845,200. Yun ang mababayad niya sa BIR comparing to the 8% opted tax rate. So mas nice, no? Pero not all the time, ha, na mas nice si 8% opted tax rate compared to the progressive tax rate. So depende yan. Okay, so dapat in the first in the early stage or in the in the first quarter pa lang of the taxable year, there must be planning, no? Planning of whether to choose the 8% or whether to choose the progressive tax rate. Since during the first quarter, you need to choose whether you will like the 8% or you just choose the progressive tax rate. And hindi na yan pwede siya ma-change, no? You can change it again on the next calendar year. Pero if you opted to 8% all throughout that year, your tax rate would be 8% and you don't need to pay the percentage tax. Okay? So, kaya dapat merong proper planning at that time. Okay, another illustration, Mr. Eli, an officer of ILAS International Corporation, earned in 2019 an annual compensation of 1,300,000 inclusive of 13-month and other benefits in the amount of 120,000. So aside from employment income, he owns a farm with gross sales of 3,500,000. His cost of sales is 2 million, 2 million and operating expenses of 600,000. And then he has also a non-operating income of 100,000. So the solution, first let us check whether he can choose the 8% opted rate or the progressive rate. So let's look on the gross sales and the gross receipts. If it is more than 3 million, so his gross sales is 3,500,000, so it's more than 3 million, so meaning he cannot choose the 8% opted rate. So he has no choice but to select the progressive tax rate. So again, adding all the compensation income and the business income. So this is mixed income. So total compensation income of 1,300,000 less the non-taxable 13-month pay and other benefits up to the limit of 90,000. So your taxable compensation income is 1,210,000. Add your other income, the taxable income from business. Your gross sales is 3,500,000 less the cost sales of 2 million. So your gross income is 1,500,000 less the operating expenses of 600,000. Your net income from operation is 900,000 plus the non-operating income of 100,000. So your total taxable income now is 2,210,000. So looking at the table of your progressive tax rate, so for 2 million, you have your constant is 490,000, excess of it 32%. So 35,200. Your total income tax due is 525,200. So take note, aside from this income tax, Mr. Eli must also pay the value added tax, which is 12% of 3,500,000. Okay. So a summary and treatment of different taxpayers. For resident citizen, all income from within and outside the Philippines, compensation income, income from profession, income from business, and passive income, they are subject for taxation. But however, for passive income, it is subject for final tax. So no need for us to uh, to present it in our income tax, okay? Kasi ano na yan, passive income na, final tax. Okay. And then for itemized and optional deduction, so remember we have he need to choose either itemized or optional deduction. He can only choose it in the income from profession or income from business. Okay. And then the tax rate, schedular, yung compensation income from operation and income from business, while for passive income based on the final tax schedule. How about for non-resident citizen and resident alien? Okay, for non-resident citizen and resident alien, they are only taxable within the Philippines, okay? For compensation income and income from profession and income from business, this is subject for progressive schedular tax rate, and while passive income, subject for the final tax. And then, they can also choose itemized and optional deduction. For non-resident alien engaged in trade and business in the Philippines, they will only taxable within the Philippines. Passive income still the same, subject for final tax, while compensation income, income from profession, and income from business is subject for schedular tax rate. And then they can only choose itemized, not the optional deduction for non-resident alien engaged in trade and business. So they can only use the itemized deduction. Okay. How about for non-resident alien not engaged in trade and business? Still, within the Philippines, they are taxable. Outside, they are not. So they cannot uh, choose itemized and optional deduction because they are subject for 25% of gross income based on Section 24C and D. Okay, so that's all. So I hope you will remember all the tax rates and be sure to read again the taxable income, the deductions of the taxable income. You will also read the exclusion from the gross income with the previous topics, since this is our exam is cumulative, so meaning to say you will also we will there are topics from the first exam that will be included in the second exam. So thank you for listening, and see you in our next video discussion. Okay, so bye bye.